All right, everyone. Good morning. Welcome to the live stream. Happy Wednesday. A lot going on. I was out all last week. Unfortunately, my dad did pass away, and that was a pretty tough deal. He taught me everything I knew about trading, and at least to get into it, and then I taught myself the rest of the stuff. But he's the one who got me into trading and taught me about it. And then, of course, I just took it and ran from there. So I do apologize for missing last week. Last Wednesday was my birthday. I turned 49 years old, and so I'm running a whole bunch of crazy sales. I was going to run it last Wednesday, but unfortunately, obviously, I wasn't here. So we are going to run those sales today. So as you can see on the screen, we're doing some crazy stuff. So we got 76% off of Trade Waves Academy with code JG76. That's because I was born in the year 1976. So if you were interested in getting Trade Waves Academy, let me actually pull up all of this stuff so you can see it real quick. Hold on. Wrong click. If you go over to membership plans and click that, you'll see all of the plans that we have. It starts off with our rooms. We'll come back to those in just a second. But if we go down to Trade Waves Academy here, it's $497. Normally, I'm giving you 76% off of that. In Trade Waves Academy, you get all of these modules down here. There's 10 2-hour modules that go through in depth all of these things that we cover in my room, things that I cover in general, but in a concise, very focused way. So instead of just saying a comment in my room, you get an entire 2 hours on market psychology, capital management, options trading, including the Greeks, candlestick patterns, how to trade price action. You get bull and bear traps and spotting them, how to identify market reversals, fib levels, why they're important, how to identify key support and resistance, and then trade setups and proper risk reward. These are all, like I said, 2-hour modules. And normally they're $67 each, would be $670 if you get the whole bundle. Normally that's $497 at a discount, but I'm giving you 76% off of this price right here today only, during the stream only. When the stream is over, that price goes away. So if you've ever been interested in Trade Waves Academy, you're going to pay 24% of this price, which is like 125 bucks or something. I'm just doing quick math in my head, but something like that. So a huge discount on that today. Take advantage of that. You'll never see that price again. The second thing we're doing is 15% off of the yearly indicator. I've never offered that before. This will be the only time I do offer it, until maybe my next birthday next year. Very rarely do I discount the yearly. Occasionally I give 10% off, but this is 15% off. You're already getting 2 months for free when you get the yearly, and now you're getting 15% off of that price. So that's 59 and another, what, 20, basically 29.50. So about $80 off of that price. You get it for about $500 as opposed to $590. So that's again today during the stream only. Take advantage of that if you see it. And then 49% off of either the monthly rooms or the monthly indicator. So if you only want to try the indicator monthly, you get to try it for half price basically, because I turned 49. Or you get half off of these two rooms. So you can get half off your first month, I should say, your first month. So you get this at $49 basically, a little less, a little more than that, and this at $29.50 basically, slightly more than that because I'm just doing half off in my head. So keep those codes in mind if you're interested in, or ever have been interested in joining the rooms. These are things you're only going to see during the stream, and when the stream ends, those will go away. So make sure you take advantage of those. Real quick, if you go sign up, so you can see how to do it, because it is a little bit tough sometimes. If you go down to, say, the yearly indicator and you say click here to get the indicator, you're going to come in and it's going to ask you down here at the bottom if you have a coupon, and you'll just enter, for this one you would enter JG15 and hit enter. Make sure you hit enter, and it'll say coupon applied successfully. When it turns green, you did it right. and then you can hit either pay with credit card or PayPal and hit sign up. Now you won't enter your credit card information here. I know it's got this box. You just select that you want to pay with a credit card. And when you hit sign up, that's when you will enter your payment information. So just keep that in mind as you're signing up. So to enter the coupon codes, there's that little have a coupon right above the payment zone. You click that and it will get you to where you need to be. From a market standpoint, we had a decent pullback last week at the end of the week. But if you're new to my stream, you'll note that you won't note, but if you're new to my stream, what I've been saying for a while is July has never in history printed the all-time high for the year. In other words, the high point for the year has never happened in July. The high so far, the all-time high, happened on the last day of July. So statistically speaking, only statistically speaking, this will not be our all-time high. There's another high incoming, at least one more. There could be more than that. But my point being that in history, July has never produced the all-time high for the year. So keep that in mind in the back of your mind. It's just a statistic. Statistics fail sometimes. They're not foolproof, but statistically speaking, in the history of the market, July has never produced the high for the year. That doesn't mean we can't have a significant pullback now and then by December be back up at the highs. It does, though, it does kind of tell us that generally speaking, we should see another high this year. From a count standpoint, off of that high, we did have a pretty decent 5 waves down. You have 1, 2, 3, 4, 5 here. Your bounce also is not terrible, though. You do have a potential for this to be 5 waves. It's not great. I like this down move better, but you do have a 1, 2, and this 1 is also a leading diagonal, so I don't like that. And then you would have 3, and then a choppy sideways 4, and then 5 here. Now, we did get 5 down on the move down. So you have a 5 wave move here and a tiny 5 wave move here. We expected this bounce that we got. We would now look for them to hold and continue down if they can follow through on the bearish side. If they follow through and can break down below 63.15, we would be looking for them to come down and test this 62.40 area again, give us a bounce, and then break down from there. That would be our general downside lean. If they're going to push higher, you have basically a 1-2 setup in place, but you could see it go a little deeper. So from the low, you do have the potential for this to be a 1-2, or this can be A, B, C for 2, and then up. So this is the bullish count, back above this high, and it's much more likely we're going to try to make a new high pretty directly. So essentially it's going to be below 63.13 starts to favor the bears, and a move lower that would break down a little more and be a bigger pullback, if not a very big pullback, depending on how it works out. And to the upside, if they break back over this high from yesterday at about 63.75 or so, we would be looking for them to move directly toward the highs again, and at that point 6,500 would be the next target. Things you get in my room, I drew the support line on this chart a long time ago. I draw these in as warranted. This one down here at the bottom, they came right down, spiked it exactly, and bounced off of it. So we talk about support and resistance. You get all of that kind of stuff in my room. I'll show you how we're going to do that in just a second. So you get bigger support. So you get daily support, and then this is bigger support. This is like weekly, monthly support, stuff like that. So these bigger support lines and resistance lines, they come up and hit all the time, or come down and hit all the time, or go up and hit all the time. So you get things like that. NASDAQ is going to be the same thing, by the way. We're going to go quick here because it's the same basic principle. On the NASDAQ, you have a potential for this to be 5 down. And then you have this bounce. You have a potential for this to be another 5 down. So we look for them to hold and push down into this low, bounce again, and then break down will be the bearish look. That becomes much more prevalent if they break this low right here at around 23,000. And if they can break back above this high right here at 23,400, we'd be looking more directly towards all-time highs. So you have that on the NASDAQ. From a daily perspective, we have a major call wall at 630. We have a high put support at 629. We have another put support down here at 627, your 1 day minimum. Actually, this needs to be refreshed, I'm pretty sure. Let me refresh my screen real quick. There we go, come on. By the way, these levels all come, these daily levels come from Mentor Q. It's an incredible tool. They have started an affiliate program. So before they had no affiliate program, now they do. If you look down in the comments, in the description, there are links to Mentor Q where you can get 20% off and try it out. Full disclosure, of course, I get a kickback for sending you over there, but it's an incredible tool. So our call walls at 633 and 634, and our 1 day max is at 633.93. So 1 day max generally is a very, very good indicator of how high the market can go on a given day. So if they decide to be bullish today, 633.93 is where we would expect them to kind of cap out. You also have a major call wall there. You have a high volume level right above us at 631. The first put support is at 628. We have a high volume level at 626, and then 625 is the next put wall. And then our 1 day minimum, which gives us our lower end target, is it's basically 622. So our range today, we're expecting between 622 and 634. So a 120 point range on the ES, a 12 point range on the SPY. That's a pretty good trading range, and that's really why we're here, is to demonstrate the IWJ Pivot Point Pro. It is a day and swing trading indicator that gives us buy and sell alerts. And we use that to buy and sell the market. So we have about 175 indications that go into the indicator in real time. It is forward looking. It's not waiting for like moving averages to cross, which takes a while to happen. It's looking for premium support and resistance levels that are high volume levels that have momentum dying out and reversal. And it basically tries to get you in at the tops and bottoms of moves, and it does a pretty good job of that. It's also used for swing trading, and I have training videos on how to do all of this stuff on the website. So keep in mind that if you get the indicator, you get to learn exactly how to use it like we're going to use it in the video today. And unlike other indicators, like I said, it's forward looking. So most indicators that you use are reverse looking, or they're looking backwards, like they're waiting for the RSI to roll over, or the MACD to roll over, or they're waiting for some sort of moving average cross, or whatever you want to call it. They're all waiting. They're not proactive. Our indicator is proactive. It's looking for areas of importance. So, for instance, if we start to trade up, it's looking at this high volume level as an area of importance. And should we get here and start to weaken, it will give you a buy signal essentially right off of the level, and then we're looking for that reversal. It's not going to wait for a moving average. So when moving averages cross, what happens is you get to this level, it starts down, and then the moving averages cross, and then you get the buy signal or sell signal. And then you've missed this whole move. Generally, it gets us in much earlier than much earlier. Very often we are on the very bottom or very top of the move. Sometimes we're a few bars off of that because it takes time for it to, it can take time for it to realize or come into its weakness. So if a really strong market is coming, has moved this way really strongly, it's going to take a second for it to get weakness off of the level. So it's a really important concept to understand, is that there are buying and selling cycles and how those cycles work, and the indicator does a really good job of identifying that. So we have 1:40 left. I'll go through some quick comments. Good morning. Welcome to the stream, Rambler. Daniel, welcome to the stream. Happy 49th, Jacob. Thank you very much. Glad to see you back. Thank you, Alejandro. I'm glad to be back. Sam, good morning. Cats at home, good morning. I'm glad to have you all here. Thank you for being on the stream. I appreciate it. My condolences. I like to purchase the TradeWaves Academy, but can't find the spot to enter the discount code. I'm already a customer, if that matters. So it's going to be right above where it says put in credit card or PayPal. So if you go down, if I go click on something that I don't have here, let's just click on this one. And I scroll all the way down. So right here, it says pay with credit card, PayPal, and it says have a coupon right here. You click that, and it'll open up the coupon code, and then you put it in there. When you get if you get the indicator, we can do this real quick. You obviously get a thank you, and you get instructions. You give me your trading view name so I can give you the indicator. It tells you what you need on trading view account. It is a trading view only indicator, and then it gives you the videos down here on how to set up trading view, how to set up the indicator, how to day trade like we day trade exactly. That has produced incredible returns that we'll go over later when it slows down. Our trend day strategy and our weekly swing. Right now through July, we're up almost 40,000 on the year. On a 100K account, so 40%. Last year we made, I think 35%, 35,000 on a 100K account, so 35%. We're doing much better than that this year already. So okay, we're live now. We're the bell's rung. We need to get ready to trade. But I do think I'm having an issue here. Let me look at the charts real quick over here on the back end. Well, this stinks. Hold on, guys. I believe we should have got a sell signal there, and we didn't. So that's annoying. Let me reload my indicator. Yeah, okay, dang it. Okay, we got a sell right at the open here, guys. My indicator was not working properly. Sometimes TradingView does that and freezes it. So we are going to, okay, we may still get this entry. We're going to hang tight here for a second, though, because we missed the initial entry, and I'm not, very rarely does what we just saw happen, but it did, so we got to take it with a grain of salt there. All right. So we will be at about a 629 strike right now. If we get that sell signal back, I need to update a couple of things real quick since I had to reload the indicator. We do track the ES and the NQ, so you do need real-time data. It tracks all three things at once so that you can get a more complete view of the market, and it's part of how it calculates when we get good trades or not. So we'll have to see how this works out. That was a frozen trading view. So just like anything else, just like your modem or anything else, sometimes programs freeze. TradingView does that on all indicators, not just mine. That's just a TradingView glitch. So if you aren't seeing any buys and sells, which I wasn't, you need to unload and reload the indicator, and then you can you'll start to see them. So when we enter a trade, we do options trading. We do 0 DTE options, meaning days to expiration, so they expire today. That's how we get into our trades. And we use a 50-cent stop on price to start. So right now we're at about 629. So if we got the signal right now, our stop for the short would be 629.50. So 50 cents of the SPY price. That's where we would enter our stop. And it's wherever we go in. Obviously, I'm giving you 629 right now because that's where price is. But if we get in at 628.80, then our stop would be 629.30. So it's 50 cents above where you get in is where I set my stop. You can set your stop however you want, but this is how we are successful, so I would suggest following the plan. So we're looking for a sell signal, that is for sure. And when and if we get that, we will enter the trade. So one of the things we do is we look for where the indicator is weak and what is the weakness of the indicator. And the biggest thing is trend. So what we want to see is we want to see the market move up to a point and then turn down. And we are looking for a trade off of that level. And then we want to see it come down to a point and then come back up, and we're looking for a trade off of that level. When you get a trend day, it just continues in the same direction. And so what happens is, more often than not, support and resistance will hold. Major support and resistance. However, on trend days, it does not. And so we're not trying to trade against that. So once it clears the pre-market high or the true pre-market low, so this is the pre-market low of the morning session, but the actual pre-market low is this blue section over here, so it's going to be down here. This is your pre-market low at 626.94. Once it clears one of those levels, if it clears the pre-market high, comes back, tests the blue and black is 21 in VWAP, comes back and tests that, and then makes a new high. This is a trend day. It's telling you that support is not going to hold, and you need to ignore any sells, because it's still going to try to sell off of major levels, because that's how it works, and on most days that does work. However, on trend days, we know that we're not going to typically hold support and resistance, so we do not trade those days unless it's on trend. All right, let's see if we get a sell here. Everything kind of in a small ball here. It's been trading in a choppy sideways motion, this VWAP and 21, and then the red's something I'm trying out. It's an 8 moving average. It's more for the daily, but it's a momentum indicator. It's a moving average, but the 8-day can be a momentum indicator on the daily. So as long as they stay above it, then you're bullish, and if they're below it, it can turn bearish pretty quickly. Okay, let's see if we get a sell here. Again, there it is right there. Okay, we're going to get in at 142. And our stop is going to be 629.10. And our cost was 142. So we got in at $1.42. Now our strategy is we take half the trade, So we set our stop. Obviously, if we get stopped out, the trade's over. We don't change our stops. We don't stay in the trade. We don't trade emotionally. We trade like robots. If the stop gets hit, we get out. There are going to be losing trades. There's going to be a lot of losing trades, but there's going to be far more winners than losers. So that's something to keep in mind as we do this. We get stopped out, we get stopped out. That's part of trading. But our strategy for winning is we take our first win at a 20% win. So if we get 20% gain, we close half the trade. From there, we let our runners run. And the reason we do it that way is if this is your entry, you've got your 20% win right here, and you've got your stop out right here. These two tend to cancel each other out. So there are sometimes we only get the 20% win, right? And there's sometimes we get stopped out. That tends to cancel out. But what doesn't cancel out is once you break through and you get the runners, tends to be all profit. So you have all of these small winners and stops canceling each other out, and all of our runners tend to be pure profit. And that's how we do so well here. We really minimize our risk and maximize our gain. So at $1.42, our first take is 28 cents basically. And 28 cents on that would be $1.70. And we're about to hit that number if we can get just a little more here. Come on, guys. So we're $1.67. Dingo, winner, $1.70. So we're going to close half at 170. That gives us a 20% win. Now we're going to set our stop to 142, which is what we got in for. So we never turn a winning trade into a losing trade, ever, for any reason. It's silly. That's just a waste of everyone's time and energy. And we have at least what we call a 1 bar winner. So we got in the trade on this bar. We've gotten out of the trade half of it on this bar. And if it goes back up and turns green or just spikes back up, we have a winning trade. We call this a 1 bar winner because we did it all in the same bar. Now, if they continue on here and can break down, then we start to look at runners, and runners are the best, and that's where we make the most money. So again, our first take is 20% profit because that basically cancels out our stops when we do get stopped out, and our runners pay the bills. I know I was on a little late today. I'm still getting everything settled from last week and into this week. It was a nightmare of a week. My dog also killed another dog, which happened to be my father-in-law's dog. So it just a lot of negative stuff last week. So normally I have a lot more explanation on this stuff, on how this works, but today just still feeling the grind. All right, so we have held here. They back tested this support. So they broke support, back tested it, and now they're pushing down. So now what we look for is our next key level. Our next key level is right here at 628. It is a place you could take profit. However, I don't think I'm going to because it's so close to where we took profit already. I'm going to let them try to come down to yesterday's low and close the gap at 627.04. Jeez, that is brutal, JG. Sorry to hear. Yeah, I was literally, my dad liked to go to the casino and stuff, and he had about $400 in his wallet when he passed, and me and my two brothers took that to the casino just to have a little fun because that's what he liked to do. And my wife called me at the casino from Washington telling me that our dog had killed her dad's dog, and so that was a good day. So I have to put my dog down on Thursday, so it's pretty neat. So sorry to hear that news. Just know whatever we go through, we are never alone. God is always with us. Thank you, Steph. I appreciate that. Welcome to the stream. Jack, no rooster for you today. Sorry, buddy. Again, guys, just so you know, these levels here, the green and blue and red, all the stuff that you see over here, the put support and the high volume levels, all that stuff comes from MentorQ, and they finally have an affiliate program. So if you are interested in that affiliate program, or I'm sorry, not the affiliate program, if you are interested in MentorQ, you can get 20% off through my link below. Of course, I do get a kickback for that, but please know that I don't just peddle stuff. I've only I only have 3 affiliate programs that I market, and I don't even market one of them anymore, even though I still love the product. Motley Fool I don't do anymore, but that is one that's a great product. MentorQ is the 3rd. I just added it because their product's outstanding. They just didn't have a affiliate program. And then TradingView, which I use constantly. I would never tell you to buy something that I don't use and love. If I use it and it's okay, I'm not going to tell you to buy it. I have to love it. And I love MentorQ. It is outstanding. These levels are gold, really strong. And hopefully they can hold here, but we're about to get stopped out, so we'll see. Yeah, there it went. Okay, stopped at 142, small winner. And that's the whole thing here is these small winners, again, add up and they cancel out small losers. And I tell you, we trade 25 contracts on our 100K account. So each trade is 25 contracts, and when you trade 25 contracts, you only need to average 16 cents a day to make 100 grand a year. So when you think pennies, which is what I'm gonna tell you, we made some pennies here. If you think that, that's okay. Just know that 16 cents a day on 25 contracts is 100 grand a year. Let's see here. So we had 170, that's 28, so 14, 156 average exit. So on that trade, we made 14 cents. So not a crusher by any means. No, it wasn't. We have lots of crushers. That one wasn't. But again, those add up, and that's important to understand in trading. It's not about one big trade or every trade being a monster winner. It's about consistent edge. You find an edge, our indicator is a big edge, you apply it relentlessly, and if you do that and you trade robotically, you'll do very, very well. I hope they didn't spike us up to spike us down here. That would stink. Sorry guys, I got to enter everything for my people so that they know what to do. Now, here's the part of trading. Hold on one second. Sorry, guys. Closed 1/2, 142. I have this all wrong. Closed half 170. Stopped 142. There we go. Average exit 156. Let me turn this up. I know you guys always think it's too quiet. So this is the part of trading that is hard. We have, or can be hard, we'll see what happens. We have a sell, we have a small winner, get stopped out on the bounce. Then let's say they do this. Very possible. We're not going to get another sell signal. It already is telling you to sell. So it's not going to say, oh, sell again. You're already in a sell. You won't get another sell until you see a stop. So if you get a SS, this happens to be a long stop here, so you get a buy signal and then it's stopped out. We won't get another sell signal unless we get a stop first. So it needs to go up a little bit, stop us out. You'll see an SS come on the stream for a short stop. So like Ozzie Smith. And then you could get another sell signal. But if it doesn't give us that, and it does this, FOMO starts to kick in, chasing starts to kick in, revenge trading starts to kick in, and you start to chase, and then what happens is you enter the trade down here, they do this, and you just lost a bunch of money because you weren't disciplined. It's okay to have a small winner and miss the move. It is. It happens. It happens a lot. You have to manage your risk and reward, and you have to have a system. Whatever your system is, it's okay. So here you see the SS down here, that's a stop um, for the short side. So it's okay to miss a move. In fact, you're going to miss a lot of them because if you don't ever miss a move, you're over trading and you'll be broke anyway. So it's okay. You're going to miss a lot of moves trading. That is not a problem. That is um, not something to dwell on. Let's just move on to the next trade because in 5 minutes there'll be another trade, or 20 minutes, whatever. There's going to be another trade and it's going to be fine. So don't ever dwell on missing a move. That happens. But we got a steal here. So they moved down for 1 bar. We stole the win, and then they stopped it out, and they're back up. We will not get a buy signal here. Okay, and the reason is part of what the indicator does is it looks for cycles. So we're looking for a sell cycle to complete, and then you can get a buy. So what happens is you got this buy signal. As price moves up, okay, the buy cycle completes, and then when or continues, and then when it sees weakness in the buy cycle, you get a sell signal. You are still in a buy cycle when you get this sell signal. That's how you get in near tops and bottoms. You're not waiting for the cycle to complete. You're looking for weakness and a very, very strong potential for a reversal. We got that strong potential. Okay, and each buy and sell is looking for 7 to 10 ES points on the 5-minute chart, which is about 70 cents to $1 of SPY points, which gives you that 20% win. It also, so it's 7 to 10 points with potential. So we get the 7 to 10, and then we'll see if they can break through support, right? We get the 7 to 10, see if they can break through resistance. So we're still in a buy cycle right here. When you get this sell signal, it goes down. It does not fulfill the sell cycle. So instead of getting a buy as it goes up, you get a sell stop because the sell did not work out the way the indicator wanted it to. Was it a winning trade? Yes. Did it break through and follow through and complete the cycle? No. So you get this move up and you stop out, but you will not get a buy signal. Now we may get another sell signal here, so let's get ready because we did get a stop. Move quickly. We're staying on the 629 strike right now. Very choppy open so far. So I'm usually going to be, oh, that's lame. So what happened here is the NASDAQ and ES are now out of sync, where ES is fulfilling a sell cycle. NASDAQ is still in a weakening buy cycle. So we will not get an additional sell cycle here, or a sell signal here, and that's okay. The indicator wants the markets to be in sync, because if they're not moving together, you get exactly what we're looking at. You're looking at chop here. So you have up, down, up, down, up, down, up, down, and so they're not in sync because they are moving up and down at different rates. Until they resync themselves, you won't get a signal because one is in a weakening buy cycle, and the other is in a sell. So while that technically overall is grounds for the market to be weak, we don't get a sell signal because we want it near the top and we want it in sync, not Backstreet Boys. So you want it in sync. If they're not in sync, we're not going to get a signal because you are less likely to have the market follow through when the markets are not in sync. So if ES is moving up strongly, and we've seen this a lot lately, several days where ES and NQ are out of sync. So if ES is moving up sharply and NASDAQ is flat to down, they're not in sync, so you're not going to get a buy because you want ES, NQ, and SPY to all be pushing in the same direction. And if they're not, it has a super high failure rate. So we don't get trades. As you can see, this is not pushing down strongly. I mean, they can still follow through and do that, but this is not pushing down strongly, and that's because the markets are out of sync and you get this chop. So you're not going to get a signal here, which is a good thing because you don't want to be in this chop. You don't want to be um, basically getting stopped out as this moves back up. Hopefully that makes sense. I know it's kind of a lot of technical talk there, and it can be hard to explain, but hopefully I did it in a way that you guys are comfortable with or understand. Thanks for the great discount. You are very welcome. Very welcome. I don't do big ones like this very often, usually birthdays or Christmas or anniversary, something like that. But so take advantage if you guys can. If you're new to the stream or you just got here, Trade Waves Academy, I'm giving 76% off because I was born in the year 1976, and that's off of a $500 item that you get 10 2-hour modules. 15% off the yearly. I've never ever offered 15%, and I probably won't again for a while. 10 is usually my max. And 49% off of any of the monthly rooms or the monthly indicator because I turned 49. So the market's trying to sync back up now. Remember, NQ was in a weakening buy cycle that's now turned back into a full buy cycle. And ES was in a sell cycle that has now turned into a buy cycle. So they are synced back up now. So we can get a sell, and that's what we would be looking for, is a sell signal. Particularly, we'd be looking for it off of about 631 to 631.30. That is the pre-market high, as well as this high volume level right here. That would be an amazing place to see one come in. That has a high failure rate when that happens. I'm sorry, a high success rate, a high failure rate for the market. So the market fails there a lot. They're going to come into the pre-market high and fail a lot. And then they can go back up and take it out. But it's a pretty good place to trade off of. Okay, the markets are back in sync. Usually only takes a bar or two to get them back in sync. But when they're out of sync, you're not going to get a trade. And that's good, because if we would have got a sell here, it was a loser. That's why we don't issue a sell there, even though it looks strong, because the indicator is looking at more than just one chart. It's looking at 3 charts. It's looking at 175 things. And when those things are not in sync, or when they don't produce values that tell us we're going to see a reversal, we don't get a trade. Sorry to hear about everything. Thanks, Mad Dog. It's been a week, that's for sure. Perhaps a rooster-free day is in order. Really sorry life threw a few breaking balls at once. We're thankful to have you here, though. Thanks, Jack. I really appreciate that. Those are some breaking balls with like 8 inches of curve on them. They were really hard to hit. It was yeah, it was a week. NQ has a sell. Yeah, I mean, you're going to get buys and sells different on charts. That's why we have the indicator to collapse them all into one chart. So we look at one thing. So we don't take the sell on NQ that didn't work out. Looks like decent volume on these first couple bars. We'll see. Let's see what yesterday was. First bar definitely had good volume. Not terrible. First bar has been much better volume than yesterday, but they had like a pretty strong sideways volume. Like normally you get the big, like you see what here, you get the big volume and then it dies off a little bit. Yesterday was pretty sideways to up all the way through 8 o'clock my time. So looks like we may get a sell signal here. So let's go back over. We're staying on the 629 strike, looking for a put. That's solid, Jack. If they're not in sync, you won't get a buy. That's correct. Or Bobby and Baby Link coping with losing Grandpa, well, Link doesn't really know, but Bobby's had unfortunately a lot. She's 7 and she's been to 9 funerals and lost 2 dogs, 3 dogs. So she's going to be either really well adjusted or just really morbid. I don't know, but I hope okay. It's hard to know. Do you ever avoid the first 10 minutes of trading, even if a signal due to the higher volatile moves, leading to easy stop out what might be an otherwise successful trade? No, I don't avoid the first 10 minutes because very, 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 very often I've gotten, say, a sell signal or a buy signal. In this case, say a sell was in the first bar of the day, that does this very often. And it just never looks back. And you get the right side of the trend and you got in at the exact right time. So there are going to be times that you get stopped out in the first 10 minutes of the day, but that's any time. I mean, yeah, I understand the first 2 bars are a little volatile because all the volume's coming in at the open of the market. And price can jump a little bit, but it can also absolutely crush. Those can be the best absolute trades. I actually enjoy getting a buy or sell on the first bar of the day because quite often those can turn into really big winners. When did you turn 49? I have a birthday on the 17th. July 30th is my birthday. So last Wednesday, I was going to live stream on my birthday, and the world had other plans for me. All right, there we go. We're at 130 at a 629 strike. Our stop is going to be 629.50. And we are short. You take it as soon as you see the sell signal appear. You don't wait for it to lock in because you can miss a 1 bar winner like we got here. If you waited for this candle to lock in as a sell right here, you would have lost this trade. Instead, we won that trade because we got in as soon as we saw the sell signal appear. So we're in right now short, and even though it went away, we stay in our short trade. We don't get out of it. The sell signal, if it continues down, will come back. And if it goes up, it won't come back, and we'll take a loss there. However, I don't hide those. Those are on the balance sheet. Every single trade is on the balance sheet. We have trades where we get in here. It does this. We get a win, and then the same bar goes back up. The sell goes away, and even though we charted a win here, you don't see it on the chart. And the same thing goes for losses. You don't see the loss on the chart, but it's there. So all of those trades are chronicled in our trading journal. We have very good records of that. I keep one, and one of my users, one of my paid subscribers, keeps a trading journal for me too, so that at the end of the month we make sure our numbers match. And if they don't, there's been many times where you're entering a lot of data that you just fat finger something or type it wrong or miss a trade, whatever. And Matt keeps me very honest with that, so that the numbers are always accurate. I don't hide from anything. I show you my losing months. I show you our winning months. And out of the last 19 months, we've had, I think it's 15 winning months and 4 losing months. Okay, we just stopped out there at 104. And that is a sign of a great trader. If you go look at traders, they all have losing months. They all have losing weeks. They all have losing days. Most should not have a losing year unless they play like a high risk, high reward strategy. Sometimes very successful traders do that and do have losing years. But most won't have a losing year. And we don't have losing years. 1-4, that's what, yeah. Okay, so we stopped out on that one. We'll see what happens from here. Very choppy, very, very choppy today. Not much movement so far. They are building a squeeze. We don't know in which direction, but given how this has played out, I would suspect it's going to go up. It's going to be a buy. And there it goes. So we're looking for the squeeze to squeeze them up to the pre-market high, and then we'll see what happens there. Remember, if they eclipse the pre-market high, pull back and hold, and then make a new high, That does give us trend day parameters. And at that point, we don't trade nearly as much because of that. And I teach that on the once you get the indicator. If you're new here, welcome to the stream. One winning trade so far, one losing trade. Very choppy open. This is a hard day to trade, period. If you're looking to trade today, hard to find anything in there that's great. But we are trading the indicator. I have great discounts because of my birthday. You'll never see these numbers again. 76% off of TradeWaves Academy, which makes it about $125 instead of $500. 15% off the yearly indicator, which I never offer ever. That's the first time anybody's ever seen that. And 49% off of the monthly rooms or the monthly indicator. And that's the first month, by the way. Just the first month. I should clarify that on the thing. I should have put first month on there, so I do apologize for that. Maybe I can do that right now. There we go. Fellow Leo, I know you're a great person. I'm a little biased, of course. Yeah, a Leo can be a blessing and a curse all at the same time. I'm a pretty outgoing and can be the center of the room, which my wife can sometimes not enjoy. But it's part of the reason she liked me, and we ended up getting together in the first place. So she has to take the good with the bad, just like I do. But there's no bad. My wife's perfect. Sean, I saw your message. I just messaged you back. I'll get into that. I'll get into that with you after the live room. Okay. Okay. We need to go back to our day trade alerts. Still looking. So we always want to be aware of what we're looking for, so that we can be ready for that trade and not have to take 2 minutes to try to enter a trade when the market moves very, very quickly. So right now, we had a sell, and that sell stopped. When you get a sell stop, that means we have continued on in the buy cycle. That means we never exited the buy cycle. So when you get a sell, that means the buy cycle has weakened, but we're still in the buy cycle, and we're looking for it to follow through to the downside. When it doesn't, you get a sell stop. So that means our next trade would be another sell. It's not going to issue another buy here. It already issued a buy. This buy over here was in the buy cycle. It switched into a sell because the buy cycle weakened, but the sell cycle never followed through. So it's not going to issue a new buy down here. It's going to issue a stop instead. Clip that quote about your wife being perfect and send it to her. You are welcome. Women understand other women. That's a fact. Bill Burr, I like Bill Burr. I went and saw him live. He's got a quote or a stand-up bit where he says, "What I found in 25 years of marriage is we're always working on me. My wife's like under glass in a museum because she's so perfect. We don't want to mess with her." Bulls are pushing here. Squeeze on the NASDAQ has played out, but the ES still has a squeeze building, or it's still in the middle of the squeeze, and it does appear to be a squeeze up based on price, obviously. So as long as they're still in the midst of that, you can probably expect more upside, and maybe not a ton. It can, this bar can alleviate the squeeze. We're not looking for, this is a 5 minute squeeze, so we're not looking for like a 100 point move or something crazy. The market just was ready to expand the range it was in, and that's what a squeeze is essentially range expansion. So just so you guys understand, everybody likes to throw around terms, they don't know what they mean. So a squeeze is essentially, you have a range, and let's say that's our range. And the market is trading like this. Well, a squeeze identifies that price is moving without volume in one direction or the other. And when the volume starts to come back in, since there was no volume before, they're able to move price very quickly. And so you have this resistance line up here, you have this support line down here. And when they break above or below, they end up moving pretty quickly in a relative to the chart you're on. So on the 5 minute chart, that might be one SPY point or something, or maybe more than that. It could be a whole lot, because it could be building off of a daily squeeze. Remember, a 5 minute squeeze can build into a 1 hour squeeze, can build into a daily squeeze, and so on. But what happens is they end up breaking resistance or support, whichever way they're going. So let's say up, because that's what they did. And all of these bears who were trying to short here turn into bulls. And so you got buyers already buying on volume to break through. Then all the bears turn into buyers, and that pushes you up to wherever that exhaustion point is. And then you can either see a turn down or some chop, and then continuation. Starting to get up close to our pre-market high and high volume area, so hopefully we start to get a rejection here. And okay, so on that bar there, the squeeze on the ES also alleviated, so no longer squeezing, or no longer in squeeze mode on either chart. And we're getting close to the pre-market high, as well as the high volume level here at 630. Again, went through the discount codes, but these levels here are given by a site called Mentor Q. It's an outstanding tool. It's very, very good. They have a whole bunch of tools and training and all kinds of stuff there. There are links in the description of the YouTube video for 20% off of their stuff. I highly, highly recommend it. If you're going to trade on your own, there are incredible levels. It tells you where the options levels are for the day. And those levels are really important for day trading and swing trading, both. I'm going to move up to a 630 strike if we do get a put here. I'll be using 630 as my strike, just so you guys are aware. I'm always locked and loaded with my trade, so that as soon as I see the buy or sell, I can get in. That's how I get in very quickly. I have the trade queued up completely, and I set my limit higher than the price of the option at the time. So if the option's $1, I set it like at $1.05, and I continue to move that around as price moves. So all I got to do is hit the button to process the order, and I have a very high likelihood of getting filled because I have a higher price in there than the options price. And that doesn't mean I'm going to pay more. I'm still going to get whatever the going value of the price is. So I'm still going to get the quote-unquote market price. But I'm not doing it with a market order, which crushes you. Never do that. And I'm not chasing because I have my limit set high enough that I'll get filled. So if you're trying to buy a $1.05 option and it's $1.05, you're going to have to chase a lot of price moves, even a penny, because you're not going to be at the right price. So I may pay a penny or two more for my option, but I get filled right away. And that's where you want to be. You don't want to be trying to chase and then 20 cents later you missed the trade. If it gets through overnight high, this can run. Yeah, I mean, anytime you break the pre-market high or pre-market low, you have the chance for a trend day to take off. But that's all to be determined. One thing that's really important, I'm going to maximize my screen here real quick. Wrong screen. One thing that's important is to look at supporting evidence. And I haven't even done that today. Again, I'm still kind of catching up from last week, guys. I'm not all the way in my normal trading environment. So this is a good sign for the bears. RTY being red is a good sign for the bears. And the reason is not that RTY leads the market, it rarely does. In fact, it trails the market most often, but the market's not going to break out and run to the upside if RTY is not going to participate. So if they're green and RTY is red, that's a real red flag for potential reversals. All right, we just got our sell. We're going to take $1.27 on a 630 strike. Our stop is going to be 630.25. And so with a $1.27, it's going to be 26 cents essentially. So give me 1 second as I get all this filled out. $1.27, so 26 cents would be $1.53 would be our first take. And I already have that in and set up, so once it hits $1.53, it'll automatically close half of my trade. That's our first take. Again, if you're new here, we take our first profit at 20%, and then we let the indicator run after that. Okay, came back down, tested the 21. So now we'd like to see some follow through down through VWAP here to at least pay us, and then we'll see what happens after that. If they bounce the 21, then we could start to see them trend because they are near the pre-market high. They're back testing the 21. And if they hold that area and go, that is typically the start of trending. But they still have to prove that they're going to do that. The Dow Jones transports are also flat to red here, and the banks are basically flat. So nothing is running away and being super bullish, which tells me a trend seems unlikely. Trend up anyway, unless RTY gets on board. RTY being down over a quarter of a percent is a red flag for breakouts. The ADD is also pretty weak. It's at positive 227. The markets are positive, so you'd expect it to be positive, but it's only 227. On trend days, you'd expect that to be up around 1500. All right, there's our first take. Close half for 153. That's a winner. We'll set our stop to 125. Hopefully we can get a failed breakout here and come all the way down and test the overnight low, which was way down here at 626 and change, 627 almost. That would be a perfect scenario here. Please take advantage of those coupon codes, guys. They are one-time events. My birthday happens once a year, and maybe next year it'll be 50% off, but you'd have to wait a whole year for that. So You'll definitely not see 76% off of TradeWaves Academy again this year. You'll definitely not see 15% off of the yearly again this year. Um, I can't promise I won't do anything 50% off of the rooms, but those other prices you definitely won't see again. Side note, if you did make a purchase, I will give you access to the indicator after the stream. It's too hard to do everything at once. So if you did, I see some of you purchased. I appreciate that. Thank you guys very much. Um, you'll have access to it about 10 minutes after the stream ends. Also, I think some of you upgraded from monthly to yearly. Again, thank you very much. And I will cancel and prorate refund your monthly indicator. So whatever you had paid for up till now, you'll get the rest back, and I'll cancel the monthly since you're on the yearly. When you got a spare second, can you remind us how to get the indicator on TradingView? Yeah, so you have to set up your, you got to get the indicator first, obviously. Then there's a form to fill out where you send me your TradingView name. And there's a video when you get the indicator on how to do all of that. So on investwithjacob.com/TV-indicator, if you go to that page, it's got all the videos and setup and how you get, send me your name and everything. And that will show you how to set up the indicator properly. But you go in, you got to give me your TradingView name. Once I get that, I'll send you an email that says you have access, and then you need to go up here to indicators, and then you go to invite only. You can see I have all the mentor queue stuff, and then you'll see IWJ Pivot Point Pro in there, and then you just add it to your chart at that point. But I have to give you access before you're able to see it, so if I haven't given you access yet, that's probably why you can't see it. What was my entry price? It was 126 on this one. I'm sorry, maybe 127. Let me double check. Day trade alerts. 127, yeah. All right, looking for follow through. We appreciate you. Thank you, Alejandro. I appreciate you more. You guys make this happen. I don't have anything without you guys. So I'm very glad that you appreciate this. But I can tell you I appreciate you guys 10 times more. Not to be a topper. I don't like toppers, but my point is I can't do any of this without you. So I really appreciate that, and I'm glad you're enjoying it. I'll tight do you trail once your first take profit is hit? So I usually put the stop right around the entry price. So I put my stop at 125. My entry price was 127. So in the big scheme of things, the second half of the trade will take a 1 cent loss. So I usually put my stop, once I take a profit, I put my stop around my entry price. Sometimes it's slightly lower, sometimes it's slightly higher. It just depends on the cost of the option and how much room I have. In this case, I didn't have a ton of room back down to that, so I want to give it, a couple extra pennies. Just doesn't hurt your bottom line too much and gives you a little bit of extra room. And I can tell you that I have been stopped out by a penny and I've been saved by a penny, so pennies matter. We're back down to support here. So I'm going to take another half of the remaining off at $1.95. I'm going to move my stop up to $1.45. And to continue to answer your question, right there you can see we just moved our stop up to a 50-cent stop. So we start with 50 cent on the SPY price. We start there, and then once we get 50 cents on the options price, we move there. So right now 195 puts us at 145 for our stop. We're actually going to move that up to 170. Stop to 170 because we just hit 220. So I trail 50 cents the whole time. Go shorty. It's my birthday. We don't give a, it's not my birthday. See, 50 cent. That's how you remember that. So we got a runner, and that's what we're looking for here. We're going to do well on this trade, and I'm never looking to try to get, I'm always looking to try to get a huge $3 win or something, but that's really hard to do in day trading. So if you're always trying to hold your entire allotment of options to try to get this giant win, you're going to lose a lot because there just aren't that many giant wins in the day or in the week. A lot more often you're going to end up getting stopped out or not getting to your target, and that's going to just create a really hard trading environment. So you take wins along the way. So we just came into major support here. Is it major support like a high volume level? Well, it's a put support just below it, and we have all of these rejections right here. So we don't want to have them come down and do this and take all of our profit. So we lock some gains in right here. They may collapse this. They may do this. That's a very possible outcome. But if they don't, we just gave up a whole lot of profit for no reason. So we always want to take profits at key areas. My next key area now is probably going to be yesterday's low, down here around 627, because taking some off at this put support is going to be too close to where I just took some. So I just took some profit right here. So I'm not going to take more profit right here, even though, if you're a little more conservative, probably not a terrible idea. I'm a little more aggressive in that way. If I just profit, right here, I'm going to go ahead and let it try to break through and run on down. And if I can get that, that'd be great. If I don't, I already have a really nice winning trade. So again, we got in. I know we didn't get in. The sell didn't come like exactly at the top, but it came in on the bar that was at the top. And so we get all of the follow through with it. We saw a nice pickup in volume there on that last bar. That's a good thing as they come into support. You want to see more volume coming in. You just hope it's on the right side. So when you get down to support, you should generally see more volume. And that more volume is going to be one of two things. It's going to be the buyers, more volume to reject it, or it's going to be the sellers because they need to push through. So more volume coming in on the sell side on a very strong selling candle as we approach support is good, but now they got to follow through with volume on this bar and get through that put support. Thank you for doing these live. Do you use Ghost Wicks when doing EW, or is that why you do your EW off the ES instead of the SPY? It's one of the reasons. Yeah, ghost wicks are they're important for price, but not so much for Elliott wave. Very often, by the way, the ADD is cratering. It's gone down from over 500 to basically flat. That's a good sign for the bears. But yeah, the ghost wicks are important because very often price will go hit whatever that ghost wick was. Um, Maybe not that day, but they very often will get to that price over the next couple days. So um, I think they are important for understanding price, but not necessarily Elliott wave. How does the throne room? How does the throne room look like? Is it in Discord or on your website? What is going on there? It's on Discord, and PT is phenomenal. He worked on Wall Street for a long time. He is very smart, very advanced trader. Now that doesn't mean all of his trades are so advanced you can't do them or anything like that. And he walks you through it, and he's got great teaching. But he is PT is a very talented guy and does a great job in there. And his trading is different, which is why it's a separate room, but it is in Discord. Um, so he does some spread stuff and some uh, iron condors and different things that are a little more advanced than what I do in my room. I keep it very basic and simple in my room so that newer people can come in and learn, and experienced people can come in and make money. And that's how I want to do it. And for people who want a little more advanced concepts, PT is a great teacher for that. In fact, while I was out last week, PT covered my room for me, and we got saved by a penny there. $1.71. That was close. We'll see if they can reverse this, but if they go any higher than that last high, we're out. But that was close. Anyway, PT was in there last week covering my room, and in just that week, all of the people, a ton of people signed up for his room because of how good he is at what he does. They just didn't know. So that was kind of a free trial for him. Can we know what the T stands for? I asked him his name, and it is Paul Tall, and he neither confirmed nor denied. It's his last name, but it's also the reason he signed up for it, and the reason it's called the Throne Room is when back in the day when I first started doing this, PT came in and we started talking, and I learned a lot about him. But he played a game that happened to have the same initials as his name, Plarium Throne. I have no idea what that game is. I'm not a gamer, but that's what he played, and so that's why it's called the Throne Room, because I thought that was funny. But Paul Tall, I could have called it the Tall Room, I guess. Oh no, don't do it. Yep, they did it. Okay, we stopped out there for $1.70. Nice trade. Very nice trade. So let me do some math here, and I'll tell you what the average exit was. $1.67 was our average exit there. $1.67. So on our $1.27, we made 40 cents, or about 33% on our money. That's pretty good for a single trade, and gives us now 2 winners and a loser on the day, and a nice winning day. Oh, look at that. They spiked us and got us. Jerks. But again, these are not times that you chase. You're at a key support zone. We took a we took profit basically at the bottom. They've spiked it down a little further, but this is why you take profit here, because you don't know that they're going to continue. And this is a very key support zone. That's why I drew the line there. That is likely to hold, and you have put support right below it. So it's not going to go too much further if they're going to fail. If they're going to succeed and get through, then cool, you got a runner that's going to collect on that. But you don't want to, sit here and then end up taking a much worse price because you were hoping they broke through. We don't trade on hopium, we trade on key levels. Per that PT info, how do you upgrade to continue to both rooms, your room and throne? You guys together are fantastic. Thanks, Brad. I appreciate that. So you just go to your account on investwithjacob.com. If you go to I think I have it up listed here. If you just go to the website up here at the top, it'll say account. And if you click that, you can log into your account. And when you go to your subscriptions, you can just hit upgrade, and then you can do it there. If you want to know a little secret, Paul likes to remain a little bit anonymous because he has clients that he works for that pay him quite a bit of money, to manage their money for them, and you guys get it for $98 a month. I can tell you that's like 1/10 of what you'd pay for Paul if you just went to him. So you're getting a high level money manager trader for $100 a month, basically. Now remember, I said we don't chase, right? Because there's another trade in 5 minutes. Here is your first miss of a trade right here. This move up, we did not have a buy signal on that, so we didn't chase it either, because if you chased it, you probably entered around here and not done so well, or done, minimal. However, 10 minutes later, you got an absolute runner of a trade, the biggest move of the day, and we captured it with our sell signal. So just be patient. Trades are coming. We're not going to catch every move because the conditions aren't right for them. And that's okay. There's nothing wrong with that. Unfortunately, we're not going to get a buy here because the NASDAQ never completed its sell cycle. It did not sell as strongly as the ES did. So it's actually going to be in a sell stop right now, whereas the ES would be in a buy. So this is a quadruple fail to break down. So either we're going to trade in a range all day, or RTY is going to catch up and turn green, and we'll break out to the upside. But again, with RTY being down almost 0.5%, it's a red flag that we're likely not going to break out. Can they still break out? Of course they can. Doesn't mean every time that RTY is red we can't have a breakout day. But typically, I'm just going with what typically happens, because that's what we trade, is what typically happens. I think that's an important concept. Our indicator's probably 65%, I would say. I never run the win loss on like a winning trade versus a losing trade. I always run the numbers for the financial. In other words, how much money did we lose or make? So percentage of winning trades to me is irrelevant. It's more about risk reward. I know traders who win 4 trades and lose 6 and make money because their risk reward setup is so dynamic that when they win big, and when they lose fairly small, relatively small to their wins. So the number of trades you win or the percentage of trades you win is kind of irrelevant. However, from a just understanding probabilities standpoint, if you have a 65% win rate, that means you're going to lose 3.5 trades out of every 10. However, that doesn't mean that every single 10 trades is going to go 6 winners, 4 losers, or 7 winners, 3 losers. You could lose 10 in a row, you could win 20 in a row. You have to understand that just because you go through winning streaks doesn't mean the indicator is foolproof, and just because you go through losing streak doesn't mean it doesn't work. It's just an edge. That's all trading is of any level, of any kind. Whatever you choose to trade, you're looking for an edge. And then you take that edge and you just use it over and over and over again. And you take the small wins and you let them all add up and compile. And at the end of the year, you're looking at a really big return on investment. 35% last year is pretty darn good. And we're already up over 40, we're right around 40% this year. So that's what you should be looking for, is the bottom line. The bottom line is what matters. So many people get wrapped up and they try the indicator for 2 days. And they're like, it didn't work. Well, no, it was 2 days worth of trading. And I can point out several 2-day losing streaks over the course of a year. Lots of them. I can also point out several 10-day winning streaks, So it's all about understanding how this works, not so much about trying to find a cheat code. And I know people call it a cheat code because it's really good, but it's not about finding some secret way to beat the market that nobody knows about. It's about compiling all that data that everybody uses to, in a very simple, easy, usable format to allow you to beat the market if you just follow the rules. That's the problem, though. People struggle to follow the rules. I was on a 3-week winning streak with the indicator, and I'm recently having to accept the losing days. Yeah, I mean that's just it. I mean, a 3-week winning streak is amazing, and that feels great. But you can't let yourself get all euphoric, because then you start to over trade, or over extend your trade. In other words, if normally you trade $100, then you start trading 1,000 because you're like, I can't lose, and that's usually when the losing starts. But you can't do that. You have to stay within your means. You have to use the proper sizing. You have to use the proper strategy, and just understand that winning streaks are awesome and losing streaks suck, and you're going to have to face both of them. But if you just follow the rules, you're going to come out on top. Good trades, better lore, Papa John's. Jack's always got the jokes. I like it. Don't forget, guys, I'm not here to beg. I don't do that, but I do ask occasionally. If you like today, you made some money, you're having fun, you're enjoying the stream, any of those things, please like, share, comment. It only takes a second to click the like button. It helps me a lot. So I would really appreciate it if you guys did that. It only takes a second to comment. Only takes a second to share. Tell your friends, if you got trading friends, tell them to come check it out and see what they think. I already hit it. I appreciate you. Thanks. Thank you, Steph. I appreciate you. That's awesome. And thank you for doing that. This type of price action right now would be more of a range day, right? Where it's trading between this range. Happy birthday. Thank you, Kevin. I appreciate that. Um, Alejandro, yes, this is a range day so far. So range days typically stay uh, between the pre-market high and the pre-market low, whatever those boundaries are. Or they stay, within the range of yesterday's candle. If you had a big, so if yesterday was a big moving day, which it kind of was, it wasn't huge, but there was good movement up and down. If it stays inside of that area, that's considered a range day or an inside day. Um, or if there's just a bigger range that the market's been trading in and it doesn't break out of that, then you're still in ranges. But as far as a range day goes, yes, and between the pre-market high and pre-market low is a range day. This pre-market low, again, a little bit fake because the way TradingView does it, the pre-market session is the yellow and the post-market is the blue, so it doesn't take into effect that the market did come down to 626.90 overnight. It only accounts for where it got to in the morning session. So the true overnight low to me is down here at 626.93 or so. But the pre-market low here at 628 is still holding basically today. So until they break down below that, this is the top of the bottom of the range, and then if that expands, this expansion comes down to here, which is the 626.90 whatever I said it was 90 626.90 area. Yes, like the stream, it gives us insight into your logic. I appreciate that. That's one of the things I do this for. There are many people out there who just, are shysters, if you will. They just put out trades. They don't tell you why. If the trade fails, they don't tell you what the logic was. They don't give you good info, and then you're stuck holding the bag. If the trade succeeds, they don't tell you why. They don't give you good info, and you're stuck wondering what happened. And you got to figure it all out for yourself. So I try to be very transparent and open and explain and train you to understand the market. There's no better email I can get that I'm leaving than the ones that say I'm leaving your service because I've learned so much that I can do this on my own. That's my whole goal. Teach a man to fish. So many people just put out random information and don't give you any background as to why they're doing it or any understanding, and then you're confused. And there are times that we take trades that people are confused by, there's no doubt. But I'm able to explain why we took the trade. And I think that's extremely important if you're going to spend money on something, that you understand what you're getting. Do you feel outside of the indicator using MACD and RSI, we can expect huge moves to help us take a swing trade? So outside of the indicator, I think the MACD is very good at finding bottoms. Very good. If you go back and look in history, almost all of the bottoms are predicted by the MACD. And it's a very solid way to look at the market now. That's because we're in a bull market. Bull markets go up. So it's easier to define when you're going to get to a bottom in a bull market than it is to define when you're going to get to the top. So the MACD can help us understand when the top is weakening, when the move is weakening, when we're starting to exhaust. But it's not a great predictor of reversals on the top. It is a great predictor of reversals on the bottom. Now, if we turn into a bear market or a much more much bigger corrective move, then I think that goes to the inverse, where it will be very good at predicting the bounces and the tops of the bounces, and much harder to predict the bottoms, because you're going to see a lot of fallout in those corrections. So yeah, they're okay tools. I like the MACD better than the RSI. That's personal preference. They're both effective if you use them the right ways, but no one indicator alone is powerful enough to, in my opinion, powerful enough to give you a great trading strategy, which is why we use it. Our indicator looks at so many different things because, yeah, the RSI can be overbought, but if you're getting strong buying volume and you're selling into that, you're going to get smoked. Um, the market can be overbought and oversold for a long period of time, and it can stretch further than you ever imagined. So what you look for is you look for the overbought, you look for a reversal candle, or oversold, you look for a reversal candle, and then you apply that off of support and resistance. Those types of things all together become very powerful. But any tool on its own, other, my indicator withstanding here, because it is looking at all those things at once. Any one single indicator on its own is generally weak. Now, if they're a conglomerate indicator like mine is, where it's taking into account a whole bunch of information, and it's basically taking a whole bunch of other indicators and then looking and applying volume analysis, options analysis, support and resistance analysis, all these different things, all at one single time, as well as looking at 3 charts and tracking momentum on the charts and understanding where their cycles are and all those different things, then it's really powerful. But any one indicator alone is usually pretty suspect as far as trying to create a trading strategy. All right, we will be looking for a sell again. They have pushed up enough here to get back into a full buy cycle, so we're going to look for a sell. The reason we didn't get a buy again is the NASDAQ was not as weak, so it never completed its sell cycle down. You can see the ES from the top went all the way down and spiked through the bottom. And the SPY, so did the ES. The NASDAQ, if we go back over, its candles did not get all the way down to the bottom here. So it had one strong candle, one okay candle, and then another strong candle, but it never got back to its lows. So it wasn't nearly as weak as, say, the SPY was. I am going to stay with the 630 strike. It is, I generally take either at the money or one out of the money. So in this case, that would be 630 or 629. Or 630 or 631, I mean. Went the wrong way there. Some of that will depend on price. If options are very expensive, I'll probably lean toward the one out of the money to try to get a little cheaper price. But right now, for 630, it's about $1, which one tells me the market's probably not going to move very big today. So that cheap options price there is telling me that the market isn't pricing in a huge move, as well as the out of alignment between ES, NQ, and RTY. That tells me that you're not likely to see a big move. So that tells me I need to take profits a little quicker when I do get a trade that works out. So we're always going to take 20%. We're not going to move that. That's the first take no matter what. After that 20%, though, I may take profits a little more aggressively at support levels. So if we got 20%, say, right here, I would still take profit at this low, even though it's the 3rd time they're testing this area, because the options market isn't pricing in a breakdown or a breakout. It's just pricing in chop. Are your trades on TradingView, or do you place trades on another platform? I trade on, depending on what I'm doing, I trade on both Thinkorswim and E-Trade. I do not trade on TradingView at all. I just use it for charting. Slow, boring day today, but a profitable one, and that's all that matters. We're making money. I need to rejoin the room. I'm trading more again. We would love to have you back. I know that life deals you cards in different ways at different times, especially last week. So people have to step away from trading and then they get back into it. So we would love to have you back. Take the advantage of the discount. You get half off your first month, basically 49%. But I'm gonna round. And happy birthday! Thank you. Guess Apple up about 5% is keeping the market from breaking down. So yeah, you always want to look. I talked about that earlier. Supporting data is always important. So one supporting. So the things I like to look at, if ES and NQ are green, what's RTY doing? Well, RTY is red. That's a red flag to me. If the markets are green, what is the ADD doing? The advanced decline. It's at positive 260. That's a pretty weak advanced decline. You want that to be up around 1,000 or more, really 1,500 for a really strong trend day. So that's not adding up. What's the VOLD doing? Volume dollars. They are pretty weak today. They're pretty flat at about 12 million or so. That's a pretty low day. Positive. So it's not screaming breakout. What are the transports and the banks doing? Well, the transports are up a little and the banks are up decent. So that does support the bull narrative. However, if you look at the Mag 7, and that's the last part of supporting data, what are they doing? Well, SMH and NVIDIA are getting beat up. Microsoft is getting beat up. Meta's doing okay. Netflix is doing well. Amazon's doing very well. Tesla's doing very well. Apple's doing very well. And Google's doing well. So to me, this is a breadth issue. If the market breadth was good, this market would be ripping because the Mag 7 is ripping, the markets are green, but market breadth is not good right now. As I said, the advanced decline is only positive 300, so that's really what's keeping the market up and pushing it up. So the overall supporting evidence isn't terrible for the bulls. There are red flags, such as options pricing, the RTY, the advanced decline, and the VOLD. But there are also there's also decent strength in other areas that can move the market. So we could see a second half of the day breakout where the ADD improves quite a bit. We could see a meltdown where the ADD collapses. But right now, what you have is a weak overall market versus the Mag 7. But anytime the Mag 7 is green, it's going to be very hard for the market to fall. Anytime it's red, it's going to be very hard for the market to go. Can you explain the ADD some more? I'm not seeing it on your screen. One sec. And welcome to the stream, Matt Hope. How are you doing? I went to high school with Matt Hope. I assume that's the same Matt Hope. A proud graduate of West Point. Overall, pretty awesome dude. I'm not sure if this is going to show for you guys because sometimes it doesn't. Let me see if it works out here. It doesn't. So what I'm going to do is copy and paste a screenshot of it. So the ADD is the advanced decline, and what that means is how many stocks are above yesterday's close versus how many stocks are below yesterday's close. So if there's 3 that are above yesterday's close and 1 that is below, then your delta there is positive 2. So your So you're looking for really green or really red advanced decline on big strong days. So we started up here at a delta of positive about 550 or so. They immediately cratered it. They took it all the way down to negative. So the breadth was negative, and now it's getting stronger again as we get through the day. Um, so this is a um, just kind of background indicator of the overall health of the market. So if, right now there's a delta of 300 more stocks are advancing than declining, is what that means. And that's a delta. So out of, I don't know how many stocks are out there, honestly, 5,000 or something. Anyway, out of all the stocks out there, if you add all the ones advancing and subtract all the ones declining, you have a delta of 315, which tells you that there are more stocks advancing than declining. Matt is doing bueno, and it is the same. All right. Good to see you, Matt. Good to hear from you. That is not on TradingView. That's in Thinkorswim. So I have 3 screens up. I have this screen that you guys see that has my TradingView charts, my indicator, and all that kind of stuff. I have my Discord screen, which is all of my people that I communicate with. And then I have my trading screen, which is Thinkorswim and E-Trade, those types of things. So I use Thinkorswim for the VOLD and the ADD and trading most of the time. And I use, you know, the stuff on the chart here. So it's easier to keep your chart clean. You can use it. TradingView has it. I know they have it. But I just don't use it in TradingView. All right, we've reached the high volume level and we're close to the pre-market high here. We're going to see if they are able to reject. If they don't reject here, we'll probably close down the stream and call it a day for trading and take our win. If they do reject here, we'll take that trade and see what happens. If it fails, then we'll probably shut it down. If it succeeds, well, we'll see what happens next. But with that in mind, if we do get a rejection here and a trade, then great. If we don't and shut it down, those coupon codes will go away. So if you have not taken advantage of those, please do. Those are only good for the live stream, and when the live stream is over, those go away. Found ADDT under indices. I don't, honestly, I don't know what it is on TradingView. I don't use it, so it could be ADDT. Total advanced decline difference, that seems right. Let me see what it looks like on here, though. Yeah, this is why I can do it in 15s on, I can do it in 15s on, yeah, I'm not sure what we're looking at here. Oh, I see, okay. Sorry, I can do it in 15-minute intervals on Thinkorswim, which I like better for day trading, so positive 438, it's about the same. They're a little off, but this could be delayed data, I don't know. Like I said, I don't use it on TradingView, so that's. I don't want to speak to something I don't use because that's not very professional of me. Not that I'm the most professional guy ever, but when it comes to things like that, just talking for no reason because you want to try to sound smart, stupid. So for TradingView, I am not sure how that works because I don't use it. Am I looking at a 631 strike? I am. Good point. Yeah, I do have 631 strike right now. Also, don't forget, if you like these levels, high volume, call resistance, and put walls to 1 day max them in, that is Mentor Q. There are coupon codes for that in my in the description of the video. So on YouTube, if you go down and look at the description, there's a link to my website, and then there are links to get 20% off of those plans. Most people need the premium, not the pro. The pro is very expensive, and for people that are serious traders that do a lot of weird stuff. So I would say get the premium if you want it. That's what I use. So that's what these levels are. They're very effective. You can see that we came down to the put support and held. We've come up to the high volume level and so far are holding. All right, let's see some weakness here and get us a trade, and we'll see how it goes. Hopefully get one more winner. I mean, technically, so I cut off day trading at 10 o'clock my time, 1 Eastern, and that is because typically volume dries up, markets get choppy, and they're much harder to trade. So sometimes we wrap it up before. If it's a trend day, we don't trade very much, things like that. But if I have a winning day and the market's slow moving, then sometimes you can wrap it up and say, hey, I'm good with my 75 cents or dollar win or whatever, 40 cents, whatever the day is. So we'll see how that goes. There's no use in sitting here watching a very, very dull market. So as pointed out, we do have a 631 strike waiting. We don't have a signal yet, but we are waiting with that strike. NASDAQ is weakening. I think on TradingView, it's the one NYSE $ADV minus $DECL. That could be. That's a lot to put in, though. When the waves get messy, are they generally B waves? Or wave 4s, or wave 2. I mean, some kind of corrective wave. Yes. Slow day. Typically, you don't short dull markets. It's a little different for day trading. Not too much though. Dull markets tend to hold. So when they get down to say the 21 here, they tend to hold that level and then go back up. Markets that are going to break down tend to move like these red bars over here, and then break support. They were unable to break support here. They poked it and then went right back above it. So we always trust the indicator because winning trades don't have to be big moves. From here to here, it can be a winning trade. So we always trust the indicator. There are many times that the indicator gives a trade that I'm like, really? That doesn't seem right. And then I'm like, wow, that was an amazing trade. So I always trust the indicator. There's a reason, and that's because I can only see a few things at once, and I can see everything at once. So there's usually some underlying factor that I'm missing, and that's a nice thing to have. Jacob, how much do you risk on a single trade on a 100K account? You should keep it between 1 and 5%. So if options prices are $2, which is fairly high for options prices, and they can be much higher than that. There's been times that in April, for instance, there were days that they were like $7, $8, $9. And in those times, I went all the way down to 10, and that was still a lot. But I trust the indicator, and I knew that that would be a short time of that happening. But you should generally keep it to 1 to 5%. So if options prices are $2 and you do 25, that's $5,000, which is 5% of your account. Understanding that we have a stop, and that stop is usually going to be, maybe 20% of that 5%. So of that 5,000, you might have lost $1,000. So you're only losing about 1% on a big, on a 5% trade where you get stopped out. You're only losing about 1% of your overall capital, but you're risking 5. So I try to keep it in that range. And if it gets too expensive, like, I get it. There's days that options are $2 or $3, maybe a little more. I'll still stick with 25 on those days because for the most part, those are going to be short-lived. Volatility is generally short-lived, a month or two. But when the volatility got as high as it did in April, I had to adjust down to 10 contracts because it was just too expensive. Apple moving up, holding market up, possibly exemption to India tariffs, meeting with Trump this afternoon. Sure, why not? I don't say that because I don't think that Apple's up or holding the market up. I say that because I don't care what the news is. You know that though, Sean. But yeah, I mean, with the Mag 7 mostly green, it's going to be harder for the market to break down. They would all have to, or some of them would have to flip. NVIDIA is slightly red, but not really. I mean, it's a third of a percent down. And Microsoft's a third of a percent down. Everything else is pretty darn green. I don't know what that word is, Alejandro. I don't know what that is. TGT really moved. Laugh out. Is that target? TGT? I don't know. It is target. Yeah, they have earnings today, I'm guessing. That's a decent move. Um, and if you look, they spiked above the call wall right here at 105, and then they rejected it, came back down, held the 21, came back right back to the call wall. So the levels we use are really important levels. You'll see them hold over and over and over again. But I'm guessing Target had earnings today. I have no idea. I don't follow Target. Not my favorite store. Seeing some weakness in the ADD here, seeing some weakness in the Vold, but not seeing a ton of weakness on the charts. So we'll see if that materializes into weakness on the charts. They're struggling with this high volume level. And one thing to understand is that the levels don't mean that they are going to fail every time they get to those levels, but you might see, say, you might take profit because you might see something like this where they can't get through. I mean, you can see that they're struggling at this level on the 5-minute chart. So it's obviously a level that people are defending, which is why it's a high volume level. So these levels are important for lots of reasons. Some of them can be take profit. If you had a long here, you took profit, took some profit, and then see if they can push through this resistance zone. If they can, then awesome. If they can't, I'd really like to see them tag the pre-market high. They do that quite often, especially after a failed breakdown. And then once they tag that, they can reject, and we'll try to jump on the train then if that opportunity presents itself. So remember, all charts are basically the same. In other words, the levels, so like moving averages work the same. The 21-day moving average is just as important as the 5-minute 21 moving average in regards to price. When price comes down or up to that level, you can expect it to hold or reject. And so this 8, the red, this is a new thing. I've been studying somebody that uses it. I think it's interesting that it's a momentum indicator. So when you're above the 21, the 8 moving average is indicates momentum in the direction you're headed. So as we come up, right, as we come up over the 8, they came back and tested it here. And so when they're not coming back to the 21, this is a momentum indicator saying momentum is still strong to the upside. They came down and tested it here. When it breaks, that momentum is weakening, and you can start to look for a potential test of the 21 or VWAP. So that it's a kind of an interesting indicator for, we already know how to identify trend days, and now I'm looking to see if I can identify momentum on trend days. And see, I've been kind of just watching it. I don't just jump in and throw stuff into the indicator or throw stuff onto people, but I've been watching this for a little bit now, and it seems to be a pretty reasonable idea. We're coming up to the pre-market high now. 631.30 is the number that we'd be looking for. Could you please explain a swing trade with put spread and call spread as a hedge? Yeah. Um, so um, if you've got a key level, so let's just say we were expecting the market to reject up here. Well, we are. It's the pre-market high. We're not expecting it to, but typically you would look for some rejection off of this area. Um, you could, and on a longer term chart, so let's say we're looking at the hourly or daily or whatever, doesn't matter, but a longer term chart, we can enter a put here, right? And then you have to be astute enough to say, where's my next? So just imagine these numbers are bigger because on the chart I can show you what I'm talking about. You have to be astute enough to say, if they break through, where is my next target? And my next target would be 633. Again, imagine bigger picture stuff. We're on the 5-minute chart here, but you're going to do the same thing on the hourly. You're going to find the next level. And so I can enter a spread that is 631 to 633. Obviously, it'd be bigger than this. It would be maybe 631 to 638, something like that. I get a cheaper price because I have a spread. And this allows you to play a point where you're looking for a reversal, play a cheap hedge, and if they break through and they come up to this area, it essentially would give you whatever the spread is. So let's say it's $7. That should cover most of your put. So what happens is, and the reason that's an effective way to trade if you're conservatively, more aggressively would just be to take the put. But as a conservative measure, the reason it's great is you can usually get a fairly cheap hedge. And if they break through a resistance, a strong resistance, or a strong support, they tend to squeeze to the next level. So you're very likely to get a quick move up where you can take that profit and see if they reject there, and you can maybe keep your swing short open. There's a lot of factors that go into it. You can do all of well, you can do a few different things. So you can take the spread profit here and close out the whole trade at probably around break even or a much smaller loss than just taking the put. Because if you take the put, you got to give yourself room to fail. And if they go down, okay, you should have a level that they need to break for the trade to work. So for instance, I want them to go down and break this level to ensure that the trade is going to work, because if they come down to this level and hold, they can absolutely do this. So when they come down here, you can usually unload the sold call for pennies, if not nothing, so that if they do hold here and go up, you don't have a spread anymore. You have an open call that can collect all this profit. So there's a few different ways to do that. I explain it in okay, they are pushing through the pre-market high here, so we're starting to get into trend day parameters. I'm gonna give them a chance to spike it and fail here, and then we're gonna probably call it for the day. I do explain it in one of I think it's the Elliott Wave for Beginners course. I explain trading with hedging, trades and hedging in depth, where it's a lot more, it's on the right chart, and it's understandable. I don't like to switch charts too much, especially on something like that where I'm going to be talking for a minute, because if a trade comes up, I miss it. But essentially what you're doing is you're trying to identify a zone. So your zone here might be like this, where you have something like this, where you're looking for price to fail, and your upper end of your zone is where you'd have to close your hedge for full profit. And the lower end of your zone is where you want your trade to break through so that they can break down and you can close out the call and let it fall. Hedging is a very, very not dangerous thing, but you need to be really good at it, because it can really eat up your profits quickly if you don't hedge right. but essentially that's what you're looking for. There's another way to use hedging where, let's say they come down here, bounce, come down here, bounce, and then they come down here for the third time, and you say, that's it, we're going through. This is a great setup for a breakdown. So um, when they come down the third time, you can short down here. Now you're shorting at support, and people would say that's nuts. Can be, yes, for sure. Typically, you want to get long at support. But if you think, hey, this is where support breaks, and I want to be part of it because if it does break, I am looking at a monster drop, then you can get a call here, a cheap call, because if they hold support, they're very likely to rally strongly out of that support zone and complete this kind of inverted head and shoulders or whatever. If they break support, you can say, okay, you can cut this down to your call out pretty quickly and let them fall. So that's another way to kind of hedge and try to play a bigger move is when they come down to support and you think it's going to break because the setup is there. You can look at those types of things too, but ultimately hedging can be very expensive if it's not done right. You got the weekly high on the call wall here at 630 and the one day max at 634, just under it. So I do think this move would be capped over the next $2.50 on the SPY. Again, we're going to see they got to the pre-market high. We're going to see if this candle fails. If this candle fails, then you might have a chance for a rejection, but they're not pricing in volatility on the options. So I don't want to, usually if they're pricing in volatility, that's when you see stronger breakdowns. RTY is improving. It's almost back getting closer to green. So I said RTY would have to get on board if they were going to go up, and it's starting to. NVIDIA has turned green. So you're starting to see some of the breadth improve. Well, we'll give them one more bar to see if they can fail here. They're getting a little far from the 21, but they did push through that high volume level, so this squeeze is not surprising. So we'll give them another bar or two to see if they can fail, fail to break out here. They're only just above the pre-market high, so right now you could definitely get a failed breakout and then a turn down. Those happen sometimes, and if they do give us a sell, we'll take one more shot at it. Otherwise, we're going to take our winning day and go home. So we'll give them a bar or two to see if they can fail here. Also understand that support isn't a static thing. I mean, there are some things when we're talking about the pivot or we're talking about wave 2 can't go below wave 1, those types of things. That's different support. But just standard support like this, put support, right? This is not static. It doesn't mean that they have to come down, hit this number exactly, and bounce off of it. They can do this where they come up just short of it. They can hit it exactly and bounce off of it. They can spike through it and recover it. Support isn't broken just because they get below the number. Support is broken usually when they break it, back test it, and then do this and create a new low. When this low, so they break it, just like a trend day. They break it, they back test it, and then they break this low that they made. That's usually a strong indication that support has broken, and they're going to continue. But if they just spike through it and then go higher or go back up, that is not breaking support. That's just spiking through it. Meaning they really tried to push through it and break down, and the bulls were too strong. Same thing with resistance. Try to get through it, they spike it and break down. The bears were too strong. Keep in mind, guys, these streams are about the indicator at 10 o'clock, about an hour and a half. 10 o'clock Pacific, 1 o'clock Eastern, I do a daily call with everybody on my group, and we go over exactly where we're at in the counts, in the structures, what's important, what levels are important, why they're important. All of that stuff is more for the room, the paid members. This is just to highlight the indicator, which had a nice day today. 2 winners, 1 loser, winning day. Don't forget the prices you see on the screen, the code for 76% off of TradeWaves Academy, the 15% off of the yearly indicator, and the 49% off of the monthly first month of the monthly rooms or monthly indicator. All of that goes away when the live stream ends. You'll have about 10, maybe 15 minutes afterwards to get everything signed up, and then those codes will go away as a one-time thing for my birthday. So take advantage of those if you're interested at all. Remember, the indicator does have a 30-day money-back guarantee. So if you want to try it for a month and don't work out, you can try it at least for half price, and then you still get that money back. And if you love it, you have to get it really cheap to start with. So I always tell everybody who's on the fence, get it and just watch it or paper trade it and see how it does for the month. Then you don't ever risk a penny of your own money, because at the end of the month you can say, wow, that was an amazing month, I want to keep the indicator and keep going. Or you can get to the end of the month and say, I hated this, I don't want it, and get your money back, and you never risked anything. So if you're on the fence about it, you have no risk. You can sign up and just have it on your chart and see how it does. Just understand that this is a winning trade right here. So some people look at this chart and they're like, well, that was a loser. No, this was a winner. So you got to watch the options prices as well to understand how the trades are doing. I mean, some of it's obvious. This is an obvious winner, but some of them are a little more subtle. So the way we're moving now, we're squeezing. We'll give them a minute here if they come up to 633 and reject. Moving into that zone quickly is a good thing. That's another good point. The faster you move into a support or resistance zone, the more likely they are to reject it. Especially on a first attempt. Now, on a second and third attempt, that likelihood goes down. But if I'm coming down quickly and I have not tested this put support, and I come from here to here in like 3 bars, it's a very strong likelihood that I'm at least going to do this the first time through. I may not go all the way back up here, I may do that, but I'm at least going to do this the first time through. That's why we take profits at these levels, especially when you have fast moving bars like these. Why do you select $1 to $2 in the money instead of out of the money? Delta. So if you got too far out of the money, this would not be a winning trade because your delta is so low, and your delta is the amount of money that the option price will move per $1. So if you got a 630 strike and you paid $1 for it, and your delta is 40 cents, when they go up to 631, you will have $1.40 for your options price. So you paid $1, your delta was 40 cents. That means for each dollar it goes up, you're going to get 40 cents. Gamma is like the accelerator pedal. So on the second dollar, gamma adds in. So if your gamma was, say, 5, then on the second move from 631 to 632, instead of getting 40 cents, if your gamma was 5, you'd get 45 cents. And then it may go up to 7, and then you get 47 cents, and so on. So the further you are out of the money, the lower your delta is. So it loses faster because you're out of the money, and the further you get from the money, the faster it dwindles, and it gains slower. Have a blessed day, Jacob. Thank you for everything. Thank you, Godfrey. I'm glad you were here. Glad you enjoyed it. Have an awesome day yourself. Thank you for the well wishes. No problem, Bill. Glad you're here. Welcome to the stream. Don't forget to hit like, everybody. We'll see if we get. We'll give them. Let's see, what time is it? 8:33. We'll give them till 8:40 to see if we can get any kind of rejection. And then if we don't, we'll call it for the day. So 7 more minutes. If we don't get anything that rejects off of that 633 level, then we will move along with our day and call it. Happy birthday. Thanks, Bill. I appreciate that. So the reason these levels are so important, and you see the gamma wall here, I talked about that accelerator. So this is where gamma explosion happens, and this is where the most options are for calls. So there's a ton of strikes at 633 and 634, and the market makers don't want to pay that. So think of the market maker as your bookie. They want to collect the spreads on the options. So they want the market to be relatively quiet. That's the best thing for market makers. It eats up data, they get to collect, everything's great. However, once price gets up here and starts to break through, remember when you buy an option, somebody is selling you that option and they're holding the bag on the other side of that. That is usually the market maker. So the market makers are selling you all those options. So if they've sold a ton of calls here, because this is the high level of calls, and price starts to go up, well, they're holding the bag at that point. So what they have to do is they have to hedge their position. So they start buying calls themselves. Well, guess what that does? That increases volume, or increases the squeeze, increases the buying power, the buying strength, and allows gamma to start to go nuts, because the faster the money comes in, the faster the gamma accelerates. So market makers get trapped and they have to hedge, and then it becomes a squeeze. Same thing happens to the downside. They've sold a bunch of puts here. Market comes down, well, they break through. Well, now the market makers are underwater. They got to hedge, so they buy puts, which causes the market to accelerate down, which causes the gamma to accelerate as well. Now, these are just put supports. These are call and gamma walls, meaning this is a big acceleration zone right through here. If they get through that, we're going to squeeze to new highs. So those are really strong levels that the market makers will defend furiously, because they don't want price above those levels. So that's why these levels are so important to know. Because if you're playing your long here and you're doing great, you get to here and you're like, this is going to go up forever. It's a trend day, and then they reject strongly off of that level, or the 1 day max very rarely gets eclipsed in a day. Not in a day, at the close. So they may come up here and then by the close be back down here. Those types of things happen, but these are important levels to understand, and that's why. All right, they're going to try to reject one more time. We'll see. It's off the weekly high, so it's not a terrible place to reject. The weekly high is just above where we're at. So we'll see if they can hold here and push down. I am on a 632 strike right now, just so you guys are aware. So you feel this is a bull trap for tomorrow's unemployment claim data? No, not necessarily. So these are today's levels. This is for today. That's why 0 DTE is on there, 0 days to expiration. Tomorrow's levels could be vastly different. keep in mind, guys, if you signed up for any of the rooms or the indicator or anything else, I can't get to it until the stream is over. I apologize. It's just too much to try to go through the emails and figure out who's what. It takes some work, and it would make the stream terrible. Okay, we got a sell. We're going to take it. That's 632 at $1.09. Our stop is going to be 632.10. We'll see if we can get a little add on to the day, and then we'll see what happens after that. But the 8 will be important. If they break the 8, they're very likely to come down to the 21, which is also a little shelf of support here. So if they can break through here, we'll have a winning trade most likely. Since we did get $1.09, we are looking for basically 22 cents. So $1.31 would be our first take. Yep, we're in the trade, Sam. We got it at $1.09. If they can break this 8, we'll be in good shape. If they cannot, it's a back test of the pre-market high, and then off they go. There it is, $1.31, winner chicken dinner for the first half. We're going to set our stops. We have a winning day, so I'm going to give us a little bit wider of a stop. I'm going to go to $1. That'll make a small winning trade, I get that, but if we fail. But we'll see, because I don't want them to kind of pop up here and then, you know, try to run stops and then go back down. So either way, we're going to be in good shape. So I'm going to give it a little bit wider and give ourselves a chance to survive any kind of poke out. So a lot of times what the market makers want to do is they'll give you the initial move. They know people got in, they'll stop them out, and then they'll give you the real move. So we're going to try to avoid getting stopped out here. But we got our first take in under our belt. And we'll give ourselves a chance at a really big day versus, you know, a good day. We're going to have a good day no matter what. See, and here is a case where if this does fail, so let's say we get stopped out here. If we get stopped out here, you won't even see that we had a winning trade. So there are winning trades that you don't see, and there are losing trades that you don't see. So there's no hiding anything. It's just part of how the indicator works. This is going to be a winner I won't talk about on my video because I can't prove it was there. So when I don't talk about those losses that come in when the indicator, the sign disappears and you have a loss, I don't talk about those either because I can't show it. So it's not that I'm hiding anything. I'm certainly not. I'm very open and honest. It's just that if it's not on the chart, I won't talk about this as a win, which it was. And I won't talk about losses like that either. Okay, we did get stopped out at the $1 there, so very small winner, $1.16 average exit. But we stole a few more pennies off of them, and that's all that matters. I'm always about getting the man. They're probably still going to run stops and come down here. Maybe not. They held the 8, so we'll see. Stop for $1, average exit 116, and we're going to call it for the day there. That's a good way to end it. 3 winners, 1 loser. Nice winning day. Again, it's all about applying the edge relentlessly. It's not about big $6 winners or anything crazy like that. It's about making $500 to $1,000 a day for a delta of 100 days that gives you $100,000. It's and not that you're going to do that every day. Some days you're going to make 2,000, some days you're going to lose 1,000. I mean, that things happen. Um, but that's the whole point. Is you're just trying to grind out wins by using the edge, and it's very, very effective. We do it over and over again every single day, and the indicator is an incredible tool. So I hope you guys enjoyed the stream. I hope you enjoy the indicator. Those of you that got it or already have it, I hope you enjoy the service if you have it, and have an awesome hump day. And we'll be back again to live stream next week. Thanks, everybody. Have a wonderful, wonderful day.